Monday morning, folks, and a very warm welcome to both Ronan and Sunil on this edition of the podcast. Gold broke above 3,200 as of last week. The week before that, it broke 3,100. So almost every week, we are entering into new territories. Any specific takeaways from what has been happening in the markets, and what have you been observing that is probably interesting for our viewers to know?
So this week, because of the trigger of tariff imposition by the US and China and the escalation of reciprocal tariffs all through the week, this triggered unintended consequences in especially the US Treasury market, which I don't think a lot of people expected. US Treasuries are always seen as a safe haven like gold. But this week, the US Treasury market broke down with the prices falling and the yields on US Treasury spiking, like the 10-year up to over 4.5%. We don't really know what triggered that, but what it did was it triggered a panic in the US Treasury market where a specific type of hedge fund strategy called the basis trade blew up. And that really rippled into a lot of hedge funds where they were dumping all of their positions. And that arguably is creating a liquidity crisis in the general wider US markets. So all of that has really undermined people's confidence in what is normally a safe haven asset, US Treasuries. And it's really left gold as the only last man standing, as the only safe haven, because physical gold has no counterparty risk and it's not issued by any entity and it doesn't have any default risk. So sovereign bonds now are becoming looked at as not really risk-free, but it seems as if gold is the only asset that people really want to hold now, institutions, hedge funds, sovereign wealth funds, because it's the only asset that is considered a safe haven with this turmoil that's going on.
The sudden spike in rates has meant that people are buying gold, but this is not the normal physical buyers that we know. There's a lot of hedge funds, a lot of sovereign wealth funds, real money people who are buying, and you can see that in the futures numbers in terms of long only positions. So you are seeing buying from institutional side, but if you look at the Asian physical market, it's very interesting. There's almost a standstill. Buyers are not buying because they think the price is too high. Sellers are not selling because they believe that maybe the price is going to go higher. So you have a little bit of a standstill right now. Everyone's just on the sidelines waiting and watching. And I think that in the coming week, we should get better clarity.
Thanks for that, Sunil. Let's quickly review the technical outlook for this week, see where the supports and resistances are on the daily chart for US spot gold. The first thing that we observed from last week's price movement are these three white soldiers, as we call it in trading. You had three consecutive big-bodied candlesticks, all edging one above the other. But one of the trend lines that we're now observing is this black trend line, which has been developing from the 4th of March. And here we have gold coincide with this trend line right over here, right? So this might be one point of resistance that we might have to face as gold is heading into the next levels, which is 3,300 and 3,378. I had mentioned last week that 3,378 is, let's say, the long-term resistance that we now have in the markets. This is what long-term players are going to challenge from a bullish perspective if we are ready to see probably 3,400 and even 3,500, as we have seen some of the projections say gold might head to. On the downside, we have revised our supports. The first set of supports now have elevated, and they first lie around 3,178 in terms of a pivot and 3,134 in terms of a support. If gold falls below at around these points, I believe that you might see a lot of dip buying, as we are seeing with every move that gold tends to correct. We are seeing a lot of dip buying and gold edging to new highs. I think that is likely to continue, and these are the levels where that might happen next if we are going to see a correction in the coming week. Post 3,134, we have the next support at 3,030, which is somewhere around 3,000 psychological level itself. Thanks, Neil. Thanks, Ron. Let's see how the markets play out this week. But till then, thank you so much and goodbye.